Hey guys, welcome to Offscript, honest conversations about what careers really look like. Today, I'm interviewing Simran, who is a consumer VC investor focused on early stage startups. Simran has spent all of her career in VC and has since built her expertise in consumer investing. We get into what a VC actually does day to day, how the compensation really works, who should and honestly who should not pursue a career in this industry, and how she thinks about the next wave of consumer companies in this AI-driven world.
This is gonna have a really funny bloopers reel.
I'm gonna make a blooper.
Please do it.
This is episode 1. We are kicking off with my very good friend Simran, who is in VC. And today we're going to break down what venture capital is, any misconceptions, how to get in, and how the industry has changed over the last 5 years. And Simran's going to give her unfiltered view about her job and the industry and how she got there. All right, well, welcome, Simran.
Thank you for having me. I'm so honored to be the first guest.
Yes, we're so excited. So the first question is, how would you explain what venture capital or like what a VC actually does to someone who has actually like never heard the term VC or venture capital?
I think the simplest explanation is that we find early stage companies and invest in them. And that investment it always includes some amount of capital, but it can also include other things as well, like strategic support, help with hiring, help with fundraising down the line, things like that. More of the like specifics, like what industry you're looking at or what stage you're focusing on or like your check size, all that kind of depends on the firm. But from an early stage investment perspective, usually it's companies that are still like early in their process of building the team, building the product. They might be pre-launch, pre-revenue. They might just be idea stage. There's sort of a range there, but it's basically finding those companies and giving them money. The companies that PE firms, even like growth stage firms are looking at are way more mature. They have numbers, so you can run quantitative analysis when you're diligencing them or just trying to like understand how the business actually functions. Oftentimes at the early stage, there are no numbers at all. So you're kind of like making assumptions around what those may look like, or because, you know, the founders might be trying to figure out what their actual product is and how they want to charge for it and, you know, the business model and the go-to-market strategy and things like that. It's just like way more abstract and in flux.
And obviously you invest at the very earliest stage of companies or a company's life, but can you break down the different stages of a startup, like seed, Series A, like what even like that means?
Yeah, totally. So I will caveat and say that I think in today's market there is like blurring of the lines between what pre-seed and seed mean. But generally, like pre-seed and seed are like the earliest stages of a company. When a company is raising their pre-seed round, they might not have institutional investors investing in that round. So it could look like friends and family. It could look like angels. It could look like firms that are writing small checks, but they're not, you know, taking a board seat or investing on like a price round. There's like different kind of vehicles sort of, or like terms or like formats that you can invest through. The seed round is typically where the first institutional investors are coming in. You're creating a board. There is a price on the round. So there's like a pre-money valuation and a post-money valuation. The Series A is when it kind of gets even more institutional. And like usually around your Series A, you want to be raising that when you have some sense of what like product market fit is, or you feel like you've achieved product market fit. And then after the Series A, it kind of becomes less about like figuring out what the business is and actually like growing and scaling the business because you've already kind of done all that like exploratory work.
And is product market fit just like figuring out where the product that the company's trying to build, if it has like even a place in the market?
Product market fit basically at the highest level just means that you have figured out the product that the market wants. And like all of that kind of experimentation work that you've done around the product features and the pricing and your go-to-market strategy and like your marketing, messaging, branding, all of that is like on the right track. based on like what the company is and who it's selling to, I think there are different metrics that you would want to look at. And I think even within consumer, for example, if it's like a CPG company versus a consumer tech company, like the metrics would be very different.
Well, now we're talking about her path and how she got into VC. Simran and I, Simran, I remember, did an internship in credit research before.
I did.
Or her sophomore year.
I was a lost soul.
Yeah.
In the world
as
of
a lot of
finance.
us are. A lot of us are in college. But no, yeah, Simran, sophomore, I think it was a sophomore year or junior year.
Sophomore summer. I worked at a credit research firm, which actually ended up being like the best first internship I could have had in finance, because literally all I was doing, and this was pre like literally any sort of AI, it was summer 2018. Which is so crazy to think about.
Nostalgia.
Literally nostalgia. Like B-bar.
Oh my God.
Literally RIP. Yeah, it ended up being literally the best first internship in finance I could have, because all I was doing was reading 10Ks and like understanding
like what's
accounting.
Even going.
And I don't know if you had this in my background that you had shared, but I didn't take a single business or accounting
I did not
or
share
finance
that.
class at all in school. So like I was like fully going in there knowing like nothing. Like I literally knew nothing. Like I knew what revenue was, but I didn't even know the difference between revenue and profit. Like I literally knew nothing. And so it was a really, really great learning experience. And I think I actually still think a lot about like things that they like taught me in that internship at credit sites. And so yeah, it was great. Obviously not what I have ended up doing.
I ended up being in credit. Like, it's just so random.
But yeah, I kind of like, I knew I wanted to do something business related. There was definitely like a really long period of time that I thought about doing something legal.
Okay. Like law school.
Like law school and like working in like diplomacy or like human rights law. And I feel like a lot of my classes were really focused on that.
Well, Simran was also sociology and international studies.
Yeah, I was sociology and international studies, and then but I was in this like track program focused on development economics, and all of my classes were like development economics oriented, but it was very much like theory and like writing papers and like not as much like real world stuff. Which I think is actually what made me really like the business side of things a lot more, because it felt more like tangible and like I don't know, as like closer conceptual to my life.
Exactly.
And then I actually joined A-level because
I was like, when did you like decide you wanted to be in?
So I joined A-level literally because...
Wait, and explain like what A-level is.
Oh, yeah. Okay, so A-level is a student-run venture firm at Hopkins. We are only connected to Hopkins in name. But yeah, I joined that my sophomore year because one of the like required like research classes for the track program that I was in, I basically had to do like a full semester of research on a specific topic, and I kind of like I actually didn't know that. I like didn't think about it, and I was like, I think it would be interesting to look at like entrepreneurship in emerging markets. And everyone was using like World Bank data and like sources from like JSTOR and stuff like that, and there literally was like, literally JSTOR, and there literally was nothing on entrepreneurship. So I was like, okay, FML, like how am I gonna do like one semester of research on this topic, and like I don't want to have to go back to my like advisor and say that I'm like changing the topics or whatever. So one of my friends who was a year older than me was like, oh, you should apply to A-level because it's like investing in entrepreneurs. So like maybe there might be something there for research. Your classes, or for like that research project. And there was literally not one thing that was relevant to the research project, and I actually don't even remember like what data I ended up using for that research project. But honestly, I feel like it made me love venture so much. I think because of what I was saying before, like I felt so far away from everything in my classes, and like anyone that I talked to on the law side for like the types of law that I thought were interesting, it also just felt like I was going to be so far removed from like the actual people that I wanted to be working with.
I also feel like law is like pretty conceptual, like at least before you start like at a company or like start at a firm or something.
Exactly. And so, I just ended up really like falling in love with it. And after I joined, which was my sophomore year.
Because then it was like junior year summer, you worked at Vista, and that's like already more like growth. I mean, it's more VC, like growth oriented.
Yeah, totally. And even before that, like my sophomore spring, I interned at a seed stage startup that was in the process of raising its Series A, kind of in like a like chief of staff sort of function. And that was actually really interesting because they were basically building, it actually was kind of an AI company before its time, but they were building models that could analyze political risk in certain regions based on like different things from like the news or Twitter. And so my job, which was honestly really fun and like really related to a lot of what I was doing in my classes at the time, was basically training those models. So like every day I had like a certain set of regions that I was assigned for like the course of my internship. And I had all of these like local news sources and like random Twitter accounts and things like that that I would basically comb through and like manually categorize. And that kind of went into feeding the model that was then sold to various government organizations, Fortune 500 companies, things like that. That company has since been acquired.
Yeah, I was going to say, does this company still exist?
Yeah, no, it's been acquired. And actually the CEO who went to Hopkins worked in the State Department or something, and then now he's like running policy at Anthropic, which actually is like it's actually like so cool. Joel Meyer, like literally shout out to you. I see your LinkedIn updates. Like it was so cool. And it was really interesting for me to see the flip side of a company fundraising, while also going through all of my like A-level training and onboarding at the same time.
Like merged at like the same time.
It all merged. And then my junior summer, I interned at Vista Equity Partners, which also was really interesting. I feel like I got to see like the latest stage iterations of like the types of companies that we were looking at A-level, because Vista only invests in like enterprise software companies. And I wasn't on the investment team in the internship, but on the platform team effectively. But it was cool because we got to help with live diligence on a couple deals. And then also actually see like the whole operational side and like all the stuff that happens,
like how you actually like after you invest like how do you actually like drive value for more value like in the underlying companies?
Like how do you restructure the team, how do you like restructure like where the offices
like what are the things that are like going wrong
like
and like how do you make it better kind of stuff.
And I thought like that was really interesting. Honestly, also was just like I think good experience to work at a super like buttoned up, corporate, formal, like truly corporate place where you have to kind of like wear a suit every day and like
it's like you kind of just learn like broader professional skills.
Yeah, exactly.
Or, like, mannerisms.
Yeah, and I think actually the most important thing that I took from that summer was learning how to like hold my own in a room where I was like the youngest person and the only woman and like the only person of color a lot of times, and like
which is so important. Like I feel like it literally had like imposter syndrome for like the first like 2 years of my job.
Yeah, it's so hard.
Yeah, and you're kind of like why like you have to like believe in yourself that you belong there and like you were picked or like you're there for a reason, like to provide your own opinion and like all that. So I feel like I constantly like had to like remind myself of that.
My senior fall, I interned at SoGal Ventures, which is like a pre-seed venture firm actually started by one of the founders of A-Level. And then my senior spring, I interned at, it used to be called Green Spring. It is now a part of Stepstone, but fund to funds, direct growth stage investing. So I feel like actually throughout college,
you were like pretty involved like in or like where you ended up post grad and like are still today.
Yeah,
so
exactly. And I tried to be like intentional of seeking out. Obviously, it's like hard because you can like you kind of
Yeah,
have
yeah,
to just take
he's
whatever
kinda-
internship you're gonna
yeah.
get. But like to the extent that it was possible for me to be intentional about getting experience at every single step of a company's life cycle, I definitely tried to
Yeah,
do that.
you definitely got like a big, and like then
Yeah.
it helped you like know like what stage you wanted to be in, like
Yeah.
post grad, because you had tried out like each stage.
Yeah,
essentially.
exactly. Because I basically knew that I wanted to do.
Right.
I knew that I wanted to do early stage, and I felt
Right.
like obviously there were internships, but like I felt like I had gotten enough of a glimpse at like different types and
Right.
styles and stages of investing, like some like public markets, like PE,
Right.
like growth, fund of funds, and early stage was the thing that I loved the most.
Yeah, totally. Simran's now solely focused on consumer investing, but prior to her current role, she was at a different firm focused on.
Yes. So the firm that I joined after I graduated from Hopkins is called Equal Ventures. It's a seed stage firm, very thesis driven. At the time, we focused on 5 industries: the care economies, which effectively is like healthcare, but it's like women's health, senior care, childcare, climate and energy, insurance and employee benefits, commerce, and supply chain and logistics. We all kind of started off as generalists, working across them. I actually spent most of my time in commerce.
Energy? Oh, I was gonna say energy.
Well,
but I don't know.
I ended up like having to focus on climate, but initially because like I had always wanted to do consumer, but again, like kind of, I think kind of similar to internships, like to me the most important thing was getting a job in early stage venture and like somewhere where I could really maximize my learning and my network and just like the experience.
Right.
And it was really hard to get a job in consumer because
Totally.
every single consumer firm wanted someone with like 4 to 6 years of work experience,
Right,
which
which
I
is,
obviously
like,
like,
you
didn't
didn't
have. And like they would see my graduation year on
like
my
20
resume
yeah.
and like not even like look at the rest of my
Right.
application.
But
And
this was like pre-equal or like.
yeah, this was like
Okay.
senior year of college
Oh,
when I was
okay,
applying
okay.
to venture jobs. And so I kind of had to pivot to be like, okay, what is the thing that matters most to me?
Right.
Like it is getting an investor role. And ultimately looking back, I truly am like, I'm so glad that Equal was my first job ever and my
Yeah.
first job in venture because the opportunity was amazing. But that is why when I first started out, I was trying to do as much as I could that was consumer oriented, despite
Right.
Equal being definitely a little bit more like B2B leaning.
Right.
We eventually like verticalized more as a team, and I spent more and more time and ultimately 100% of my time on climate and energy, which
Okay.
was I was at
Okay,
Equal.
I didn't know you were interested in consumer from the start.
Yeah,
Okay.
actually, like most of the deals that I did at A-level were consumer deals.
Oh, got it. Okay.
Like I was the like consumer person.
Oh my God,
I feel
wait,
like
that's so
at
cool.
A-level.
No, wait, I did not know that.
I think there's been a little bit of like a misconception around consumer businesses because
Right.
there was a period of time, really like around the D2C boom, I would say, where like in any other major
Yeah.
market cycle, crypto, climate, AI, although I think AI is more lasting and can definitely get more into that. But like the D2C boom, there were a lot of generalist investors that
Yeah.
did not understand how consumer
Oh, got
companies,
it.
specifically physical product companies, scale and like what their
Right.
capital requirements are and like what are the metrics and you know what are the potential pitfalls and
Right.
how do you manage retail distribution if you want to expand omni-channel, things like that. And so a lot of firms poured a lot of money into companies that
Got it.
ultimately failed, and they ultimately lost a lot of that money. And so I think as a result,
got it.
there was kind of this conception that consumer was like dirty. It was like, oh,
So,
like
people
you want to do
didn't-
consumer,
yeah.
like there's no money to be made in consumer.
Right. Okay. I feel like because that was like the narrative of like someone who is not like in consumer investing like every day. Like that's
Yeah.
I feel like that was what or like the stereotype or like misconception
Yeah,
that I had
totally.
that like it's so hard to invest in consumer companies or like to want to be in that space. It's
Yeah.
Like,
Well, I think that even that is like a whole other like separate conversation
Yeah.
where I think a lot of people are like, well, how do you even diligence an early stage
Right.
consumer company? And it's a good question. Like, how, or any consumer company, like, is it just the product that you think is cool?
right.
Consumer is actually almost entirely math. Like diligencing a consumer company
Yeah.
to the extent that there is data available is almost entirely math. You have a like algebraic equation
Yeah.
for how much money you're putting into marketing, what across which channels against
Right.
which creative. what types of customers you're acquiring. Again, like I said, there's like high quality revenue, high quality customers, low quality revenue, low quality customers. It might be easier early on to acquire the low quality customers and low quality revenue, but like you got to find the thing that's going to get you to the high quality ones early on. And each of those customers has a certain lifetime that they're going to spend with your company and a certain amount of money that they're going to spend on your company over that lifetime, which is their LTV.
Yeah,
and
I'm just laughing because
like we have very different definitions of LTV.
Like I spent all my career in private credit, and LTV in like the private credit, private equity world is known as loan to value. And when Simran first was talking about like LTV to me, like in a way earlier, in like another conversation,
like 3 years ago.
I was like, wait, what? She was like quoting me all this stuff, and I was like, I have no idea what this means.
Okay. So like that LTV is like you want to grow that LTV as much as possible. You want to retain your customers for as long as possible so you can drive that LTV, and you want the amount of money that you have to spend on those customers to like, you want that ratio to work out where you want the LTV to be like, you want your LTV to CAC to be greater than 2x.
Wait, how do you calculate like LTV, lifetime value?
So you do a cohort analysis and you basically see on average, I mean, you need like a good amount of data, and this is like time data. So again, this is why it's like
how long they've stayed with
companies are hard. How long they've stayed on, like you have a set of consumers that you acquire every month. As those months go on, assuming you're testing different marketing, your marketing is getting better, your creative is getting better. That's kind of where the taste, the creativity, the like art, like more abstract, touchy-feely consumer side comes in. But you basically then look at, okay, on average across all my cohorts, the people that are spending the most money are churning in month 10. And so I know that I only have 10 months to maximize the revenue that I'm getting, because they're going to churn then. Now there's a bunch of different things you can do with that. You can say, well, why are they churning? Let me build in different like product features, nudges, marketing campaigns, things like that to kind of drive that retention even farther. And typically, like, depending on what the company is, you could be looking at day 7, day 30, day 60 retention. You could be looking at 1 month, 3 months, 6 months, 12-month retention. It depends on the product. You could also look at it from the perspective of like, okay, I know that there's nothing I can do and these customers are always going to churn at the 10-month mark. Maybe because you're like a women's health, like prenatal brand, and you know that women are only going to take your product until they're not pregnant anymore. And like your core product doesn't make sense for them to use after the 10-month mark. So you're like, okay, I could give them more things to take with that prenatal that might make that prenatal more effective, which would increase your AOV, your average order value, and like increase LTV over that 10-month period. Or you could say, I actually like don't think that's in the best interest of the brand and or best interest of my customers. I want to like be a part of their journey postpartum. So I'm going to launch a postpartum
Okay, that's what I was thinking.
Product
like,
so
that's
that
another way to keep customers.
I can retain customers even past that. Ultimately, all this to say is like it is really just a math equation, and it is like the creative and the qualitative stuff that drives that. And I think that is where taste and like really deeply understanding who your customer is comes into play. I think like the really wonderful thing about consumer that I don't think historically has existed in enterprise businesses, but is increasingly becoming part of an enterprise strategy is like in consumer, every single tiny aspect of the consumer experience rolls up into something bigger that ultimately drives these quantitative metrics around LTV, AOV, repeat purchase rate, like subscription rate, retention, things like that. And I'm talking like your packaging is this material versus that material, or like it's this shape versus that shape. Like there is, I'm not gonna like call out the name of the brand, but like my favorite lotion, the bottle is shaped in such a weird way that like when I get halfway through, I basically have to cut it open and like scoop out the
like
rest.
Not ideal,
which I'm like,
packaging.
It's like a horrible customer experience, but the product is so good. So like I'm very loyal to it. But I'm like, wow, imagine if they like just changed the shape of their packaging.
Right.
Like,
so it's like
how many more people who like get like
Right.
pissed off and churn after the first time they have to cut the bottle open would actually come back.
Right.
Just from that one, like, and that's like a qualitative, creative, like taste thing where you have to really think about like every single little detail and how it rolls up into this like bigger
Like
experience.
what makes someone like a good consumer investor versus not?
I
Or
feel
maybe
like
I don't know
there's,
if it's like that binary, but like
yeah.
are there things that like are different in consumer investing that are important to like have as like from an investment standpoint?
The most important trait that you need to have as a consumer investor, and also the hardest part, but to me the most fun part about being a consumer investor, and I feel like this is where my like sociology like classes and like interest and like degree comes into play, is
it's like the understanding people.
Like obviously like I'm a very specific consumer profile. I am like a very specific consumer profile, but like my profile is very different from like my dad's. Like, that doesn't mean that like my dad's consumer profile is not going to spend money. I have to be able as an investor to put myself in someone else's shoes and think about like remove my own personal biases and experiences and perspectives and think about what someone else may, you know, look for, want to pay for, what may resonate with them. And on any given day, I mean, I'm doing that probably with like
so many different companies,
10 plus different types of customers where I'm like having to really like do that thought exercise of putting myself in their shoes.
Oh, that's interesting. It's like very empathetic role.
It's super empathetic, but I think it also requires a lot of like, this is gonna sound so
like, not
like,
everyone can do that. Like I feel like it's not easy for everyone to like put themselves in someone else's shoes and like actually think about.
It's definitely it's definitely not, and this is so VC brags of me, but whatever. It does require a lot of intellectual honesty because you really have to know like where you are biased. And I think like one of the reasons why I love my job so much is I actually feel like I know myself better than ever before because I have to know that like my gut reaction to like, we try every single product that we diligence. It's like a required part of our diligence process,
which is also another cool thing. Which is so
job. It's so cool. But like my gut reaction to a product is actually like that actually may be like counterproductive for diligence because that gut reaction is most likely coming from a personal bias that I have where like, for example, like I don't like tomatoes. So like if there's a like tomato-based product that I have I I'm like, I know I'm going to hate this, but like, let me try to like remove my hate and think about like my extreme disgust of tomatoes and like think about, okay, someone who likes tomatoes, like why do they like tomatoes? And then like what of this product would resonate with them?
But no, that's super interesting. But yeah, I feel like that's like another cool part about your job that you can. Like Simran's always sending me, can you try this? Or links to different new apps. I think there's like skincare ones. There's also this candle company.
Sniff, one of our portfolio companies.
Which smells amazing. But yeah, no, a lot of cool products that Simran has to just try as part of her job, which I think is like really awesome.
I was telling someone this last night that I feel so actually thankful that like I get to do the job that I get to do, and I feel so like privileged to be able to do it specifically at my firm because we really are the only firm that's been doing early stage consumer through so many market cycles. Like Mavron is as old as I am, which is wild.
God. Wait, that's crazy.
Yeah, Mavron's like 20, turning 28 this year. And so there's just a lot of like institutional learnings around like how and why companies have worked or not worked in the past. And like I actually think there's so many patterns that and like parallels that can be drawn across market cycles. And so it's cool because I feel so lucky. I feel like I get to be a student every day, just like in our partner meetings and stuff like that. But then also be able to like bring that knowledge to this kind of like next generation of consumer. Other piece that's so interesting is I do feel like it's also made me learn a lot about myself because like obviously like the founders that we work with are professional relationships and like they're long-term professional relationships, but they're also like personal relationships. Like you end up getting so close to each other when you are working so closely with each other. And especially when like there are inevitable hurdles, challenges, like shitty times and like you kind of like
have to be there for the founder.
Well, yeah, you have to. Well,
the
you
company.
have a duty to.
Yeah,
but you don't, I mean, you don't have a fiduciary duty, but you don't have to. And I've seen plenty of investors like when the
just,
going
like,
gets
away.
tough, they just like run for the hills and they're like,
yeah.
I'm out. Like, call me at the next round.
Right.
Like, I don't want to have this is like not worth my time.
Right.
And so I think for me, I've definitely taken the approach of like just have the harder conversations earlier on.
Right.
And like, this is so funny because my dad always used to say this to us when we were little. And like, I actually have found myself saying it at work so many times, but like, honesty is the best policy.
Oh my God, wait, literally.
And just like that exact phrase, like he always would be like, anytime we would like get in trouble because we would like hide something from our parents, he'd be like, honesty is the best policy.
Yeah, it's so true.
I feel like that's kind of the approach that now I take. And I feel like that's definitely like filtered over into my personal life too, or because I'm like doing all these things at work, I'm like, oh wait, like I actually kind of like this. Like maybe I want to actually apply this to my personal life too.
Have the harder conversation.
Yeah.
Okay, let's transition to like the actual day to day, like what that looks like. Like not at a high level, because I think it's like really easy to maybe like talk about it at a high level, but like what time do you go to the office, and then kind of like structure your morning, afternoon, and then like evenings, because like I know you go to like a lot of dinners and like that, and like that's part of the job, but like talk about that a little bit.
Yeah, I mean, every week definitely looks different. I would say in general, there are like a couple major of like buckets in which I spend my time. Sourcing and diligencing companies, portfolio support, networking with other investors or like industry execs, operators, whatever, internal firm operations. This could be like event planning. It could be any like LP stuff. And then I'm also still very thesis driven, although Mavron is not like a explicitly thesis driven
Wait, sorry,
firm.
what it like explain? I don't know what that means.
Basically, it
like
just
you start
means
with
that,
the
like,
hypothesis kind of thing.
Yeah, you just kind of have a prepared mind around a specific market or industry or type of business, and then you go out and you try to like find deals based off of. Personally, it's like learning how I learn. Like once I know how I learn and like how I can get to conviction on a deal, which like now I feel like I know, I can like front load a lot of that work on the market. And then like to me, I treat each thesis as like a blueprint of like if I were to go out and start a company in this space, because I think there's opportunity in this space, how would I what would be the company?
Got it.
And my thesis is like a blueprint like for that company.
Okay.
The way I use it in diligence is like that differs a lot from investor to investor, even within firms. For me, it's like a guide to my diligence process. It's not a hard and fast set of rules where like I'm only going to invest in companies that 100% match my thesis. For me, it's more of like a starting point for discussions with the founders where I'll send my thesis to founders, or oftentimes like I publish all my theses and founders will reach out to me because they'll have seen it. And I just want to hear from them, like, where do you agree? Where do you disagree? Let's break this down. Let's chat. And like for me, it's a really helpful way to understand how a founder thinks, which is like a huge part
of like your
getting
process.
to conviction in an investment, because really like I said, like you're backing a founder in their vision a lot of the time, and their ability to navigate through any of those potential hurdles, which like I have like some idea usually about what will come up, but like there's always really crazy shit that you can't expect. And so that to me is like what a thesis is. And then for me, part of doing that is so that I can like get to conviction faster on investment opportunities when I see them. Like
you're building it. Yeah, you're kind of building
like
your
I'm
own
doing my diligence
exactly.
in advance, so that when I meet a company, and like this literally is happening right now, like there's a company that we're diligencing that is like directly tied to a thesis around basically like AI accounting and business analytics tools specifically for consumer brands. My memo's written because I did everything in the thesis. So like all of my diligence now, I actually, rather than having to spend 2-3 weeks on it, I can spend 1 week on it, immediately do references, and I'm just kind of digging into the very specifics of the company that I'm looking at, like their model, their pipeline, their product feature set, things like that. And so it like makes it easier for me to get to an answer faster, which is it's very important in a competitive environment. I think like starting out in venture, straight out of school with no prior work experience and no real like industry experience, there really was no, and like I had no network. When I joined Equal, it was 4 or 5 months after the firm publicly launched. So like Equal had no brand. It was an emerging manager. There was literally no reason why any founder should have ever answered my emails or like taken the time to talk to me. But like I had to get into the hottest, like you had to get access to the hottest deals. Like that was like literally what our job was. And so building out theses and publishing them was like a way for like
founders to reach out.
Yeah, or even just like I just would spend so much time talking to people in industry to make up for the fact that I didn't ever work in an industry before being an investor.
Right.
And having that like base of knowledge meant that founders honestly had like became more willing to talk to me, and like we could have more productive conversations early on where they would be like, wow, I can't believe you're like,
you have a view then and like that you can talk about versus and you're more informed on the industry.
And the view is like directly related to the industry, which requires like doing the work of like actually research, like going out there and like talking to people versus just like thinking in my own head and coming up with my own idea. But it was a way for me to honestly get around my age.
Like
and
like being super so young.
And now like obviously I'm not that junior anymore, unfortunately or unfortunately, but I do still find it really helpful because I feel like founders appreciate when someone comes into like the first call informed and not asking them like stupid questions.
So, you were talking about how you would split your week kind of into like networking, sourcing, diligencing, internal stuff.
Operations, portfolio support. And then like the amount of time that I spend on those buckets, I would say that differs definitely week to week. And sometimes like things can even change in the middle of the week or like at any given point in time. Because deals can come and go really quickly early stage. So like sometimes we might meet a company that's really interesting and then we literally have 48 hours to make a decision, which means like
you guys
you're
are
clearing your calendar for those 48 hours, which could also be over a weekend. But like if you have conviction in the opportunity, you're excited, you want to win the deal, like it's very like self-directed. Like you obviously don't have to chase any deal if you don't want to, but I think if you don't feel competitive about getting into the best deals, then like you shouldn't be an early stage investor. Like you have to have a little bit of that competitive mentality and like
you want to win.
I want to win. Like I don't like to lose, or if I'm gonna lose, I want to know that I've put in the maximum amount of effort. Like it is truly my pet peeve when people are like lazy and say they like, oh, this company is going so quick, the round is going so quickly. Like, there's all these like XYZ like really good firms that are in the mix.
Like you're already setting yourself up for not even trying to get into the deal.
Well, I think like if someone's like, if you are scared off by that, then
then you
shouldn't be in this job 100%, which is like a little extreme of me, but like there is natural selection in venture where like you will be forced out of the industry ultimately, like if you don't have that
any deals or
you don't have a track record, you're not getting into like the right deals, the best deals, your deals don't have markup. So a little like that's why I say it's like self-directed, like
like
you have to want that for yourself and for your firm and for your team, and you have to like kind of feel that hunger and that sense of urgency, and that also kind of ties to sourcing too. You basically always have to be sourcing.
Like how does that like how does like sourcing work for early stage? Like it's kind of just like your network, or like how does like a deal come through? It's just like word of mouth,
a lot of it is like network, and I think the best deals always come through networks, honestly. I know you had mentioned one of the things you wanted to talk about was like AI and like how AI is like impacting venture, and I think this is actually a really good example of that. Now there's so many like data scraping, like LinkedIn scraping tools and stuff like that, that it's like very similar to what salespeople use to find leads that basically VCs are using. So there's like a percentage of deals in the early stage market that every single firm is seeing, because every single firm is using the same three.
Oh my God.
Like Harmonic, Spectre, like Adio, like whatever. Like, so like those deals everyone is seeing, and there might be really interesting ones in there for sure. But I think because that like those deals are becoming so competitive because everyone is seeing them at the same time because they're all tracking the same signals of like this person left this company and changed their job to stealth. That gets surfaced on Harmonic, and obviously every VC is reaching out, and there's a Harmonic MCP connected to Claude, connected to your email. Automated cold emails are going out. So you have to find other ways to like
really source
either meet those founders earlier or be thesis driven and give the like make the founders like more because they feel like you understand the market and their business better than anyone else. So from like the earlier stage perspective, that even earlier, that basically means that like
literally before they have like an idea or anything like that.
They're thinking of starting something.
Right.
Like I want to meet them then. And like that's why I say the lines are blurring between pre-seed and seed, because if it's someone really great who's thinking of starting something or just has an idea, and like I know that they can do it. I don't know exactly what the idea is going to look like, but I know they can do it.
You want to
like,
back this
generally
person.
They're thinking about it in the right way.
Right.
And part of having that conviction in the founder is like having conviction that they are generally thinking about the product in the right way because they really understand their customers. Like, for sure, I'll like write a seed check into that company. But those intros and connections and those deals come through networks. And like that is very like that. So, that is
like networking is such a big part of VC.
Yes, but I think it's networking in a slightly different way than people initially think about it. I think a lot of people, and in general, I think people think about networking as like very transactional. Like you do a 30-minute coffee chat, you know, whatever. You'll send them deals, they'll send you deals. Like that's actually like so counterproductive. Like it's really just making friends. Like you're really just making friends, and like this is.
That's what you like. You were saying like it blurs kind of between like business versus like your work versus like your personal life. Kind of
and this is reductive, but like people send the best deals to their friends.
Right.
Like if I'm not like friends with you,
like why would I want?
Yeah. Unless like there's something specific that you're bringing to the table that I think could be really helpful for this deal. But like I'm fighting for my allocation, like my portfolio construction. I have a check size. I got to hit my ownership targets. Right. There's like limited room and around. And you don't want to push the companies to raise too much for a variety of reasons, because you want to make sure that like they can hit the metrics for the next stage. And there's like a huge rumor mill, and the gossip is like fucking insane in venture.
Yeah.
Like any competitive deal, you hear about them.
Like it's a small
and like I hear that company that I'm diligencing has gotten 2 term sheets. I could figure out who those 2 other term sheets are from, because people talk about it.
Got it.
Because people tell their friends,
right?
So like you can like there's a lot you can hear about a lot, and I think that's why going to the events and like it's so part of the ecosystem is so important, because
like you're just making friends.
You're making friends, but I'm also like hearing things. Like I'm like, oh, I heard someone talking about this company at this dinner. Like I know they're probably tracking that company. Like I'm gonna go home and check Affinity or CRM and see if anyone on my team has met them, and if not, like I gotta meet that company. But like those conversations are happening over like drinks at dinner, not like in a 30-minute like I just met you for the first time.
Like you're not gonna share like that double veto with like someone you just met.
No, definitely not. But I feel like all of this sounds very like insidious and backstabbing, and like there is like an element of like competition for sure. I think like that is more, I think, on the West Coast, and like I feel like SF early stage venture is more like that. The New York ecosystem is honestly it's like small. Everyone knows each other for the most part, which honestly I think makes it so fun, because like you kind of do inadvertently become friends with people, especially if you like are in the industry for long enough. Like you all know everyone, like you know everyone's most likely looking at the same deals, like stuff like that. I also like there's definitely times where like I'm looking at a competitive deal, and like my friends in venture are the people that I'm genuinely asking them questions, because I'm like, is this part of the deal crazy? Or like when you looked at this company and like they might have passed on it, like why did you pass on it, or like what did you think of this? So there's equal amounts of like collaboration and respect. I think definitely in like New York early stage venture, and especially at this point, like having been in the industry for 6 years, like you kind of have your crew a little bit of like the people that you're friends with, that I know if I tell them I'm looking at a competitive deal, like they're not going to go like
backstab or exactly.
There's like a high degree of trust. I think the other dynamic that's interesting and I'm seeing more of now from the networking perspective, I have a lot of friends who are investors who are moving to the operating side, so they're leaving their investing roles and going to work at like a startups or companies of various stages. And so then it's kind of fun because like those are still my
also
friends.
because they can pass on, like, you know, that they're working at these companies, right?
Yeah, and also like they can help me with diligence if like the company that they work at is like the major incumbent in this space.
As a comparison to like maybe like a very corporate setting, like usually like your networking is like those 30-minute coffee catch-ups at the office, for example. Like we're not really like going out to drinks or like dinner with like someone we're necessarily like networking with. And then just like quickly touching on your diligence process, like what do you guys usually care about in your like investment committee memos? Like what do you, like I know you mentioned you guys do references, but like since the companies that you guys are diligencing don't really have specific numbers necessarily, like what are you specifically writing about or like trying to showcase about the company like when you're presenting in IC?
I mean the team is always the most important thing, so like references are a very big part of that, but we also have to spend time in person with founders as part of our diligence process, and like we will travel to make that happen. And so I think the team is the most important. The second, and like specific to Mavron, is customer love. Like our customers, whoever the customers are, really like ingraining that like product or offering or service into their like day-to-day lives. Like is it becoming like a habit and something that's like they're using so consistently that it's like they do it without even thinking, in the way that like you put on your socks before you put on your shoes, that kind of thing. And that's like where, you know, you can back into that quantitatively, you can back into it qualitatively. So that's something we really care about at Mavron. And then for me specifically, I always look for some sort of distribution advantage. And it's funny because now this is like a part of the venture conversation, because we are in this age of AI where it's never been easier to build a product, whether it's a software product or a different type of product. The barriers to entry there are so low. So like people are like, oh my God, that means that distribution is like the thing that matters most. Like, do you have some kind of hack or asymmetric insight on distribution? Like, what is your go-to-market strategy?
Okay, let's just shift to kind of like who a VC is cut out for versus not. You can't, like, it's not really like an execution-oriented job. Like, it's more like you start like high level, like this is what you believe, and then that's how you like go after the companies. But maybe like touch on like, are those like the key things?
I have two answers, and then I think this also kind of relates to like the advice that I would give someone that like wants to get a job in venture, or like is actively recruiting, or like even just networking, or like whatever it may be. First answer is like the consumer specific stuff, which is kind of ties to what I was talking about earlier. You have to be able to put yourself in other people's shoes and just like really understand your own biases and your own experiences and like your own story and who you are. That's like the also most important thing that you need from a recruiting perspective. Like you need to have a story, and you can retroactively go back and like tell that story based on your experiences and your life and who you are as a person. But I think the easiest way to have opinions is to just ground it in your own lived experience. And as a consumer investor, that's super important. That's literally the basis of taste. It's the basis of your taste. Your taste is just your opinions and your preferences. It's not some crazy like, you know, super like artsy abstract like whatever thing. It's literally just your opinions. And your opinions are your opinions. You can never be wrong. So especially if you're grounding it in your lived experience. So I think from the consumer side, that's really important. I think in general in venture, you need to have that like competitive edge for sure. Like you need to feel a self-directed sense of urgency to want to make a fuck ton of money. And like you have to be like a capitalist. Like we literally are capitalists.
Venture capital is the word. Yeah.
Look, like I obviously like was majored in international studies and sociology. Every class was like so anti-capitalist, but like you have to be a capitalist and you have to think about things from that perspective. And if you don't feel like you are like motivated enough and like excited enough about what you're doing to like blow up your weekend to win a deal, you should, but probably venture is not the right industry for you, or maybe you're not at the right firm on the right team, investment strategy, but like you should think about things. I don't think it's impossible to do this job if you're not outgoing, but I do think it makes it a lot harder. Ultimately, venture is a sales job. I am selling my capital in an environment where there's a lot of capital competing for the same deals. And once I make that investment, I'm selling that investment to downstream investors to make sure that they're marking it up. And then ultimately that company is exiting through an acquisition or an IPO or like, I don't know, whatever it may be.
Right.
So I can actually turn that money on paper to like real cash distributions for my LPs, but also like for me, obviously, like literally for me too. And like my generational wealth.
No.
Also.
Well, yeah, we'll get into this like about the compensation stuff, but
I think you have to
really want it.
You have to really want it, but also you have to be comfortable being in a sales role. And I think this is like the thing that I am now starting to learn.
Yeah.
Which I didn't have a lot of appreciation for early in my time in venture. You have to be really comfortable with rejection, and you have to be really comfortable with failing. Like the power law in venture is real. Most of the companies that anyone invests in are gonna fail, and they might be like spectacular fucking failures with like huge public disasters, and your name is on that deal. You're on that board as an early stage investor. You might be the first check in. You developed all that conviction. You have to have the same level of conviction in every single investment. You have to be really comfortable with failure, and you have to be really secure in yourself and like know who you are as a person. I think it's very easy for this job to become all consuming. Many of the best investors in venture do treat their jobs as all consuming, and it works well for a lot of people. It doesn't work well for everyone. For me personally, it doesn't work well. The only way that I have been able to manage the rejection, losing deals, companies failing, companies going through really hard, shitty times, like quitting a job, not having another job lined up, like recruiting, is like every other aspect of my life. Like my family is so important to me, my friends, like who I am, my hobbies, my interests. You have to have a very deep sense of self and like security and confidence and faith in yourself to know that like there's gonna be hard times for sure, but you can bounce back and you cannot let those
define you
or like even tactically your biggest failure is a direct to consumer, I don't know, like healthcare company. Does that will you let the fear and the shame and the horrible emotions around that failure prevent you from investing in the next direct to consumer healthcare company that you find that actually might be like a $50 billion business? You can't. You have to like really be able to compartmentalize. And like just be forward thinking. And that's honestly really hard to do, and I don't say that to say that like I'm
I think that's really hard.
Like, I don't think that gets talked about enough. In venture. There's like a lot of mental stamina.
Definitely. Let's move on to like compensation and like kind of lifestyle. But we talked about lifestyle a little bit, but on the compensation side, can you just talk about like how the compensation works as like an entry level to like mid-level to like maybe like senior level, and like how that changes like that?
Totally. So in general, like compensation in venture is made up of like two things. There's like cash, which is like literally the salary that you're getting paid on a monthly basis, and there may or may not be a bonus in there. And then there's carry, which is like a percentage of the returns that your overall fund drives. As you become more senior in venture, you get more and more carry. So typically you don't really start getting carry until like the senior associate level. Some people may get it at the associate level. It depends on the firm. Usually it's like more emerging managers, like newer firms, where you can get carry more easily early on. If it's like a firm that's been around for a long time, or there are a lot of partners, like oftentimes then you're not getting a lot of that carry until you're at the partner track. I think that there is absolutely a misconception that VCs get paid a lot. And to be clear, if you work at a multi-stage firm where like there are multiple billion-dollar funds or multiple multi-billion-dollar funds, the fees that you're drawing down, like 2% of that fund size, 2% of a billion is way more than 2% of 100 million.
Totally.
And so, yeah, I think, you know, there are a small number of firms where your salary, your cash can be really, really, really high and you can make a lot of money. But for the most part in venture, you're kind of deferring your earnings to carry and like the exit of the companies and ultimately like the success of your investments. And again, like I mentioned, that 10-year life cycle, it's a really long feedback loop. Like if you invest in a company in 2014,
you might not know
now
if it,
is when you're starting to see if it money really, from that. And again, like most of those companies are going to fail. There's really only a few successful companies that actually drive venture scale returns, and you have to get into them. You have to have enough ownership in them. You know, if you own 4% of a $5 billion exit, that's very different from 10% of a $5 billion exit.
Right.
You got to give your money to your LPs first. Then it kind of flows down to the investment team. And so, for the most part, as VCs, especially if you're an early stage investor where like the fund sizes tend to be smaller. Because it's easier to 10x a $100 million fund than $100 million fund than it is to 10x a $1 billion fund. You don't actually get paid until that much salary. And so again, like you were saying, that sense of urgency is really important. And like I feel that sense of urgency because I'm like, in all honesty, I could go work somewhere else and make like probably 3 times the amount of money that I'm making right now. But I'm incentivized by my economics. Like
it's like the chance in like 10 years to make, or even like 5 years to make an astronomical amount of money versus just having like a base being paid like 3 times more now. So yeah, like the venture returns like are huge sometimes. You're out there like trying to find the investment that will make that for you.
Totally.
But no, I think that goes back to your point about like you have to be like really confident in yourself and like have a really strong like self-worth, because the investment life cycle is so long that like you're not getting any feedback really like for like years. And so you have to be like really confident in yourself that it's gonna work out, or like believe in yourself kind of thing.
Totally. Like I feel like I'm sitting here saying all these things like I like have it all figured out and I like know everything and I like know how to be the best investor and like how to be the best consumer investor and how to become like a billionaire and like whatever, all these things, but like I don't know anything. I have no DPI. Like I have not actually generated one single return. But like you have the chance, and like I know that in my head. Like I know I haven't. So that's why I'm constantly trying to like learn and get better and like all of these things, and also just like make it through. Like just like make it through all the random bullshit that comes up inevitably in the market. Like as you're the fundraising, like portfolio companies are scaling, whatever it is. But yeah, it's a really long feedback loop. Totally. And like I won't know if I'm good at this job or not until
you have like a return, something to show.
Yeah, but like from like a life perspective, and like this is one reason why I feel really lucky that I like got into venture out of school. Yeah. If you are going into venture as someone who's 30, you're not going to know if you're good at this job until you're like 45 to 50, maybe even like, so
I think that's a good point.
You have to like consider that.
Yeah, I think that's a really good point.
Especially if you're raising your own fund. I mean, you're really taking no salary while you're fundraising. You don't
even know if it's going to work.
You're
putting
like
your own capital in.
Putting your own capital in. You're still taking a very low salary, even when you're like operating, when you're investing the capital. And like I don't know. I think that's like one of the cons.
Yeah, it's like the excitement part of it, but like also like the con of it, because there is the exciting part that like in that time period, like you could have this crazy outcome, but like you don't know.
but I think it becomes really easy to like lose sight of that because it's so far away and there's so many companies that fail. And like even the best, most successful businesses out there have had moments where they were near death.
Oh my God.
And so just because a company is like near death, massive fire drill, like you think it's like end times.
Right.
It actually might not be end times, but it's like, how do you tell yourself that, and how do you recognize, all right, it's time to like wrap up shop and sell this, and like I gotta ship my focus,
or like walk away. Yeah,
walk away, or like I'm gonna stick
double
with this
down,
company because I really believe in something there, and I believe in my own thought that I had when I wrote
so
this check initially.
It's so true.
Yeah, and like I think that overall like conception of venture, which is I think it's like related to this compensation question, but I think also related to the question you asked earlier of like, should you do this job or should you not do this job? This is a really fucking sick job, 100%. I get to meet the most interesting people working on the most interesting things. I go to really cool restaurants. I have really great experiences. Like, that's crazy. Like, it's literally so fun. However, there's also like a lot of cons. Like this job has a lot of grunt work also, like at like literally administrative like
it's hard. It's hard work.
And like I think that doesn't get talked about enough. And so I think if you're someone who's just kind of interested in like, I don't know, like what venture looks like on TV or like on like Twitter.
Like it's like glamorized, honestly.
Then I think this job is like, it's probably not the right job for you.
Yeah, totally. Yeah. And Simran kind of talked about like the many stages of, or where the VC market has been over the last 6 years. I feel like Simran and I started our careers at like the peak of the VC market in like 2021. And then like quickly the year after, it was like the worst tech market. For almost 2 years, right? And then now it's kind of like, I don't know actually what the state of the market is now, but
I mean, I think there's a real like bifurcation in the market, which this is so funny. If anyone on my team at Mavron is watching this, I know you're gonna laugh that I just said bifurcation because my boss Dan always says that. But there is a real bifurcation in the market where I think you kind of have the like haves and the have-nots, and this is 100% related to AI. Companies that can tell an AI story, which like a lot of companies can tell an AI story. It's, you know, oftentimes more marketing than anything else. Are able to raise rounds quickly, like big rounds, high valuations. Like we're seeing like $100 million seed rounds, like crazy stuff. And then you have other companies that are like still interesting, good business fundamentals. They're just not AI. And so I think, and those companies, frankly, are really struggling to raise because I think investor expectations around growth have just become entirely based on AI companies. And if you're, you know, a CPG brand trying to raise in this market, well, actually, CPG is probably not a good example because now, and I have a lot of thoughts on that separately, but like we are starting to see a lot of CPG brands drive returns in a way that actually looks kind of similar to AI companies, but it's hard for a lot of businesses that like can't tell that AI story. And so I think the market is like definitely picking up. I think we're at the very beginnings of this market cycle in a lot of ways, and like the bifurcation will continue. And I think obviously, like, because I am a consumer investor, I think a lot about consumers as well. And I think there's absolutely also a bifurcation of consumers where you have a set of consumers that is wealthy and just getting wealthier, and there is kind of this like massive boom in wealth that I think is gonna come very quickly because of AI companies. And it's literally, it's like these employees at AI companies that are like leaving, or like the companies are getting acquired, and like they're making millions and millions of dollars. And like you can literally look at the average like single family home sale prices in San Francisco going up, which is like directly related to this like massive like AI, boom and like wealth generation from AI companies. But then you also have a huge set of Americans that are really struggling. And like for them, they have to think about like paying for their next prescriptions, and like they can't think about like paying for like a longevity offering to like figure out what their biological age is. Like that's like a luxury to them. And so I think it'll be really interesting to see how that impacts the consumer landscape moving forward. I think there are lots of ways to make money. Like, it's not to say that there's only one type of business that is like the right type of business to invest in, but just like a very interesting time in the market.
Definitely. Okay, last section.
Yeah.
Is there any other advice that you would give to like if you were a sophomore in college? Is there any, and consider like the environment now, like versus like obviously when we were in college, it was much different. Is there any other advice like you would give someone who's trying to break in?
Yes. Okay. So, I feel like I have like three major pieces of advice. One that I think was true when I was a sophomore in college, or like when I was like applying to venture jobs as a senior, that is still true now, is like, don't let a job description hinder you from applying. Like the job that I ended up getting at Equal, they were looking for someone with 2 to 4 years of work experience. And they were actually like the other candidate. I don't know if I'm allowed to say, whatever. It's been so long.
I mean, I actually remember when you got this Equal job. You were outside.
I was like, yes. It was literally, it was like crazy. You know, it was also like peak COVID. But
oh my God.
It also was wild because I was a senior in college. Like, they were looking for someone with 2 to 4 years of work experience. I was like, you know what? Fuck it. I'm going to send it because I think that this fund's investment strategy is really interesting. The other candidate that they were deciding, like, between the two of us had worked full-time at one of the places that I had interned for 3 years.
Oh, wow. Okay.
And it just was really crazy because, like,
let me shoot my shot kind of thing.
Yeah, and, like, I didn't know this till after the fact, but it does, like, and anyone can be a VC. I'm a sociology major, like, and an international studies major also, but like,
I know everyone forgets international studies.
Like, I'm not an engineer. Like, I didn't study finance. I didn't even really study econ. I like did macro and micro, and that was it. And like social statistics. Yeah. Like, I didn't take a single math class in college. Like, all these things that people say are required to be VC are not actually required. So like, do not ever let a job description hinder you if you feel like you really have something to bring to the table. And that's where like your story, your background, your perspectives, your opinions matter a lot. The second piece of advice is more pertinent to today's market, but also like not unrelated, but it's like write, share your opinions, like get really, really good at figuring out how to form an opinion.
Form your own opinion.
Communicate an opinion. And truly, this is where I feel like my classes in high school and college have been the most important thing for me as an investor, because every single investment decision for me is the same process that I started freshman year of high school writing a 5-paragraph essay. The process of writing a 5-paragraph essay and writing a research paper is the exact process that I use. Yeah, or like you have a syllabus. And like you're given a reading or you're given 5 readings and you have to write you have to write a 20-page paper arguing something using all 5 of the readings. So like you have this material, like what do you do with it? Right? Like learn how to form an opinion, like literally take essay classes, like take writing classes in school. It will help you so much, and like share them publicly, and like don't be scared about sharing them publicly. Like just like close your eyes and post it and don't think about it after.
I think that's so important though. Like you have to be opinionated, like in venture. Like if you're not if you can't like form your own opinions, I feel like maybe it's not the right path for you.
You have to be able to, and you have to have that self-confidence and all of that. And then my third piece of advice, which you know what I'm gonna say, it's really tied to all these things, but as Kim Kardashian famously said, get your fucking ass up and work. No one likes to work these days. And truly, no one likes to work, especially when Claude and ChatGPT and stuff like that are a thing. Like, it is so underrated to actually go out and do your own work. Do the hard work of calling up 30 plumbers to figure out what kind of software solutions they would actually use and like how much they would actually pay. I guarantee you that answer is going to be very different from what some enterprise AI, whatever, like vertical software firm like wrote in their like blog post so that they could just like talk about it at their AGM and like whatever. Like do that work. And especially if you are younger, you don't have the traditional background, you're pivoting from a different industry, like that work goes a very long way, because I think it helps develop, it will help you develop better and more authentic relationships. And like, that's exactly why I have continued to be a thesis-driven investor, despite now working at a firm that is not explicitly thesis-driven.
Right. Amazing. Okay, I think that wraps it up. Thanks, Simran.
Thanks for having me.